NVIDIA stock is currently trading at $174.54 USD, marking an intraday increase of $3.60 or 2.11% as of this moment on Friday, December 19, 2025. While the broader market watches the ticker move in real time, the real story isn't just this 3% bounce, it's the quiet shift in how the largest institutions are positioning themselves for a second wave of hardware expansion that most retail investors are completely overlooking. Most people think we've reached the ceiling of the chip boom, but the current order flow suggests that the ceiling has actually become the new floor. There is a common belief right now that the heavy lifting for NVIDIA stock is over and that the massive gains of the past few years are a finished chapter. You see this sentiment reflected on popular investing sites and across social media discussions. The narrative is that the big cloud providers have already bought their chips and now they're just going to sit on them. However, the reality on the ground is starkly different. We are seeing a massive divergence between the retail expectation of a cooling off and the institutional reality of accelerated procurement. Just yesterday, the company announced its participation in the United States Department of Energy's Genesis mission. This isn't just another government contract, it is a fundamental integration of this technology into the national security and energy infrastructure of the country. This creates a level of demand stability that simply didn't exist a year ago. When you look at the recent price action, NVIDIA stock has been navigating a period of consolidation after hitting highs earlier in the quarter. Today's 2.11% move is a significant signal of strength, especially when contrasted with the performance of other major tech players like Apple stock or Tesla stock, which have faced their own set of unique headwinds this month. While those companies grapple with consumer demand and global logistics, the demand for high-end silicon remains effectively infinite. If you're using a platform like Robinhood for your Robinhood stock trading, you might see the volatility and feel hesitant, but the volume we are seeing today is driven by heavy institutional buying. Large-scale funds are moving out of defensive positions and back into high-growth tech, specifically targeting the semiconductor space as a hedge against inflation. The technical setup for NVIDIA stock right now is fascinating. We are seeing a clear support level forming around the 170 mark, and today's push toward 175 suggests that the bulls are regaining control. For those who prefer self-investing or are managing an individual brokerage account through Interactive Brokers, the Interactive Brokers platform is showing a spike in buy-side orders at the opening bell. This isn't just speculative retail heat, it's the kind of sustained volume that indicates a shift in sentiment. Even for users of Schwab Intelligent Portfolios or those looking for investment help through a SoFi robo-advisor, the weight of semiconductors in these diversified models is becoming impossible to ignore. The market is beginning to realize that the Blackwell architecture isn't just a minor update, it's a complete reimagining of data center efficiency. Let's talk about that for a second, because the business model here has changed. People still think of this as a hardware company that sells shovels for the gold rush. In reality, they have transitioned into a platform company. By providing both the silicon and the software stack, the CUDA environment that everyone is locked into, they have created a moat that is getting wider, not narrower. This is why even as competitors like AMD or Intel try to gain ground, the sheer inertia of the existing developer base keeps them firmly in the lead. If you look at your Fidelity Brokerage or Fidelity Wealth Management reports, you'll likely see a heavy concentration in these types of ecosystem-dominant companies. It's the same reason people stay with Apple stock despite higher prices. The cost of leaving the ecosystem is simply too high. Recent earnings data reinforces this. The third quarter fiscal 2026 results were staggering, with revenue hitting $57 billion, which was a 62% increase from the year before. The data center segment alone brought in over $51 billion. To put that in perspective, that single segment is now larger than the entire annual revenue of many Fortune 500 companies. This is the reality that is clashing with the expectation of a slowdown. The guidance for the fourth fourth quarter is even more aggressive, with the company projecting $65 billion in revenue. If they hit that, we are looking at a growth trajectory that defies traditional economic cycles. Investors using the SoFi trading platform or the Fidelity mobile app have had to constantly recalibrate their price targets as these numbers continue to outpace even the most bullish analyst estimates. If you are managing your own online investment strategy, it's important to look at the macroeconomic pressures as well. We are in a high interest rate environment, yet the capital expenditure from the hyperscalers, Google, Microsoft, and Amazon, shows no signs of slowing down. They are in an arms race where the cost of not having the latest hardware is far greater than the cost of the chips themselves. This is a unique dynamic that doesn't often happen in the tech world. Usually, companies look for ways to cut costs. Here, they're looking for ways to spend more just to stay relevant. This is a major factor for anyone involved in online investing, whether you're using SoFi Invest for active trading or a Fidelity trading platform for long-term holds. I want to pause here and ask for your input. Please comment below with how many shares of NVIDIA stock you are currently holding in your portfolio, and let me know if you think the recent government partnership will be a long-term catalyst or just a temporary PR boost. Your perspective helps everyone in the community get a better sense of where the smart money is moving. Looking at the older performance and the core business, it's worth remembering that this company started in the gaming world. The GeForce brand is still a powerhouse, but it has become a smaller piece of the overall pie. In the most recent quarter, gaming revenue was about $4.3 billion. While that's up 30% year over year, it's a far cry from the explosive growth we see in the data center space. However, this gaming heritage is what gave them the architectural foundation to dominate AI. They spent decades perfecting parallel processing for rendering graphics, and it turns out that same architecture is perfectly suited for the complex math required by large language models. This historical context is essential for anyone doing their own investment research or using investing sites to evaluate the long-term viability of their holdings. The future outlook is where the tension between expectation and reality gets really interesting. The expectation is that competition will eventually catch up. We see headlines about custom chips from big tech companies and new releases from rivals. But the reality is that the Blackwell Ultra and the subsequent generations are already in the pipeline, with performance gains that are making it very difficult for anyone to gain a foothold. The recent announcement of the RTX Pro 5000 Blackwell GPU with 72 megabytes of memory is a perfect example. They are pushing the boundaries of what's possible in professional visualization and workstation performance, ensuring that even if the data center market ever did saturate, they have high-margin products ready for the next level of local AI processing. For those of you using a Robinhood app or interested in Robinhood fractional shares, this kind of high-priced stock can seem intimidating, but the underlying fundamentals are what matter. The company is sitting on $62 billion in share buyback authorization. That is a massive amount of support for the stock price. When a company has that much cash to buy its own shares, it sends a clear signal to the market that the leadership believes the stock is undervalued. This is something that Fidelity mutual funds and Fidelity IRA managers look for when they are allocating capital. It provides a floor for the stock during periods of market volatility. We also have to consider the risks. Regulation and export controls remain a constant shadow over the semiconductor industry. Any new restrictions on shipping high-end chips to certain markets could cause a short-term hit to revenue. However, the company has proven to be incredibly agile in designing specific versions of their hardware to meet regulatory requirements while still providing the performance their customers need. This resilience is a key part of why the stock continues to command a premium valuation. Whether you're using an interactive broker's account for sophisticated options trading or just starting with SoFi investing, understanding these geopolitical risks is a core part of the game.
When you look at the broader landscape of online investing, you see a lot of noise about the next big thing, but the reality is that the current big thing is still getting bigger. The integration of AI into every facet of the global economy, from healthcare and weather forecasting to autonomous vehicles and national security, requires an immense amount of compute power. And right now, there is only one company that can provide that power at scale. This is why, despite the high valuation and the constant talk of a bubble, the institutional appetite for NVIDIA stock remains voracious. If you were using Schwab Intelligent Portfolios or a similar automated service, you might not see the day-to-day moves, but your portfolio is likely benefiting from this trend. For those who are more hands-on, using tools like the Interactive Brokers platform or the Robinhood stock trading features, the key is to look past the intraday noise. A 2.11% gain is nice, but it's the long-term structural shift in the global economy that is the real story here. The company isn't just selling